spite of us looking at the technicals of a stock, we also look at how the business is going. And true enough, even prior to the pandemic, their net income was hit, brought about by Smash Burger, brought about by other acquisitions as well. As what I've mentioned, their ability to be able to recognize patterns and to be able to deploy and execute across that is something that's very interesting to look at. Hey guys, so in this video, let's talk about Jollibee because as you all know, when the pandemic started and we had lockdowns, a lot of their brick and mortar establishments got hit. And if you've been following me for quite some time also, I always say that in spite of us looking at the technicals of a stock, we also look at how the business is going. And true enough, even prior to the pandemic, their net income was hit, brought about by Smash Burger, brought about by other acquisitions as well. But when the pandemic happened, their income brought about by a lot of those closures got hit. That being said, one of the things that I look at from businesses, especially businesses that move from good to great, is that they have the ability to innovate. They have the ability to shift. They have the ability also to pivot, meaning from where they were, there were some changes in the business landscape, aka there were not a lot of people going into establishments, there were not a lot of dine-in. The Philippines, generally speaking, versus the rest of the world, other regions across the board were faster to reopen. Europe and North America reopened faster. As what I've mentioned, their ability to be able to recognize patterns and to be able to deploy and execute across that is something that's very interesting to look at. A couple of things that they did during this pandemic that somehow is helping them 2 years after to get a bit back of that revenue. Number one is they've continued to deploy capital into e-commerce, into having the ability to be able to sell more online and trying not just to be fully reliant on people going into stores, which was the main narrative when we were in heavy lockdowns. But what's interesting about that is 2 years after, it's now becoming a mix also of people not just going into the brick and mortar stores, dining in, or taking out, or going to drive-through stations, but it's been normal already. They're online. They somehow developed a system where it has become, and it will continue to become, a revenue stream. Second is this, and if you've been checking out a lot of the posts that I did more than a year ago, I would mention that there have been a lot of Jollibees that have been opening in North America, aka US and Canada, and also Europe. You've seen so many Jollibee openings in the UK, openings also in Italy, in Spain. They're pretty much expanding in areas where dine-in and the economy in those areas are more open, and it's easier for them to get revenue off of that. And I just want to note this, and if you've been watching a lot of YouTube videos or reactions of a lot of foreigners, they actually like Chicken Joy. They actually like also Jollibee as a whole, and the buzz of them trying something that's from Southeast Asia is interesting. And in my opinion, coming from someone who's from Southeast Asia, it's nice to see a Southeast Asian bread company make waves around the world, that there's something that could be done in this region of the world that could compete to the KFCs, to the Starbucks, to the McDonald's, to the Burger Kings of the world. So I think those are the two things that they have done right. Pivot to online, and then their pivot also to building a lot of stores away from Southeast Asia. Now that being said, let's look at the charts, because as you all know, I'm a big fan of technical analysis. And please do note this also, that Jollibee is very, very consistent also to how it is in the broader market and how it is in general for investing principles and business principles, that in the greatest amount of fear, that will give you the greatest amount of discount, and in the same way, that will also give you the greatest amount of upside. So if you look at the charts right here, at the time of the lockdown, Jollibee was around 92 pesos per share. Lots of closures. We didn't actually know also what would be the direction of how COVID would go, and that was the lowest. And as you can see right now, in spite of a lot of things going on also globally, in spite of a lot of threats of a recession in the US, high inflation, high dollar, we've seen crypto, we've seen US markets correct massively, but Jollibee has corrected also a bit, but it hasn't dropped massively as compared to other stocks or other asset classes that have seen comparable declines in this period of time. So as of this point in time also, I believe that the greatest risk and the greatest uncertainty for Jollibee is not there. That's why in terms of discounts, in terms of having the ability to find areas where you could spot investments at a relatively cheaper price, those who positioned and those who stacked last March 2020 are reaping the benefits of it. That even if there was a correction, they're still up also. And even for those also who rode, look at this. If you look at Jollibee as a whole from the drop 2020, if you draw your entire massive trend line here from March 2020, the uptrend for Jollibee was broken 2 years after March 2022, which imputed a sell signal of 223. As you all know, I'm a big follower of trend lines because the trend is your friend until it bends, until it's broken. And it's very clear right here that the trend line that started from the drop for the first time in over 2 years, it got broken. And if you look at it also from a support and resistance perspective, you could put a resistance right here, somewhere around the 260 mark, which it tried to hit twice, which when you have a resistance that is relatively strong, if I'll zoom back out to 2019, if you look at it here, this was one of the breakdowns when we saw Jollibee also go down at that particular point in time. Somewhere around 2019, we saw a breakdown of Jollibee from a relatively strong support. And if you look at it also from where we are right now, it really hasn't gotten back. It hasn't broken out from that particular resistance yet. So that's where Jollibee is. Number one, it failed to break out that 258, 260 resistance. Number two, while we're recording this, it's out already of the upward trending slope that started from the drop of March 2020. Now, let's look at moving averages to give us more context also on how this is analyzed. If you look at it from the longer moving average, 200-day moving average, it's currently down right now. And if you look at it also, and if you try to at least gauge it from where it was, if you'll try to project this right here from the 260 mark, and you'll try to put a highs that are descending, this is your downward trending slope brought about by the failure to break out of the 260 mark. But it was also strong enough to be able to break the long-term upward trend line, and with that also it broke down several moving averages. Now I want to address this also a bit, that if you look at it right here and you'll allow me to zoom in, you will see a couple of things. Number one, after the correction of Jollibee, you see that it's building a support right here at the 191 mark. So at least for 2022, somewhere around the end of June, the lowest that we've seen Jollibee, at least for this time frame, is 191 as a level of support. You could put a level of resistance here at the 232 mark and another one right here at the 217 mark. So that being said, for those who are looking at it from a range perspective, Jollibee right now is at the resistance. It's been there for over 2 weeks, or somewhere around 2 weeks, that we have a resistance at the 217 mark. It's above the 20 and the 50-day moving average, and MACD is already above zero, which sort of denotes this counter trend that we're actually seeing right here. So the counter trend that we're seeing is pretty much because of this, but in my opinion, everything will hinge on the 217 resistance level. Failure to break that level, it actually will impute, and it actually will show that there could possibly be a chance that it breaks down from this upward trending move that started from the bounce of the 192 support level, and it could possibly break also the 20 and the 50-day moving average, basing it from at least a range level from looking at it from support and resistance. Then a possible analysis is that it could also retrace back here, which is the main level of support. So for those who have traded this area, 191 to 217, this is a 14% trade. It's not wrong also to take profit if your main narrative is just to trade 191 to 217, and we have evidence also right now that it's not breaking past that level. So for those who did that and took profit, relatively okay. And if you see it also, it's having a hard time breaking out from the 100-day moving average. Now, should it retrace back to 191 and it should hold its ground here, then that should be an opportunity also for you to position with the intent also following the same pattern, take profits at this area. That could be your area also for you to be able to sell. Now that being said, if it consolidates here for the short term, right here, short-term consolidation, you can watch out for this 270 mark. If it breaks out there, possibly it will attack the 200-day moving average first. If it breaks past that, then it could go to 232. However, if you'll try to notice it also upside wise, gives you a smaller amount of gain because the range from 217 to 232 is not as big. So from a technical point of view, that's where Jollibee is right now. 217 resistance, failure to break past that 191 support, breakout from 217, 232 resistance. Some underlying resistances also to watch out for. 100-day, 200-day moving averages are working as a resistance. It's out of the 2-year uptrend that started from the March 2020 lockdowns. It's currently now on a midterm downward trending slope, which started also from the peak of November 2021. So from a trend standpoint, let me summarize this. Upward trend from March 2020 is broken. November 2021 midterm counter trend, downward trend, is currently intact. For a short-term perspective, range support 191, 217 resistance. Next resistance is at the 232 mark. So it's currently close to the resistance. And for those who read my books or at least attended the seminars that I have, you always gauge it from that particular level. Failure to break out those resistances, and you look at the distance between support and resistance. If it's quite far for you, then it may not be a good trade. You have to wait for it until it hits a level of support. So please remember this, that will always go back to support and resistance. Will never violate those rules. The closer you are to support, that's an opportunity for you to be able to buy. The closer it is also to the resistance, that's an opportunity for you to either take profits, or if you have cash, avoid the stock. If you want more about Jollibee, or if you have any questions, put it down in the comment section below. If you want to learn more about stock investing and trading, we have different books, videos, and webinars that I've created that you can check out down below. And if you've made it up until the end, appreciate it if you can like, share, subscribe, and smash the bell so you get updated every time I come up with new content about investing and trading, not just about crypto or NFTs, but also in the stock market, because I really believe it's about creating multiple assets that will work hard for us. So that's it for now. Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.